Good afternoon, everyone, and thank you for joining us for today's webinar session. My name is Dixie McCurley, and I'm a partner and lead our Cherry Bekaert's outsourced accounting services practice. We have a great presentation planned for today and be offering up 1 hour of CPE. And with that, let's get started on today's session, how to become a data-driven technology leader. A little bit about me. In running our outsourced accounting practice, we have a number of technology companies that we work with. My passion is really building accounting and finance departments with clients and for clients. And when they don't have the team internally, them coming to us to outsource. And so you'll see here some of the major partners that we work with to make sure that we can provide the services that we need. Maggie, if you'll move forward. So what we want to cover with you today is to talk about how you can discover the importance of connecting your financial data with your non-financial data. I'm very passionate about it not only being the financial data, but to make sense of your customer counts and other things like that. Additionally, the second part, we'll talk about how you can realize the benefits of the significance of designing your chart of accounts for specific reporting requirements. When it comes down to the source transaction and how we code all of that, that's the big part about getting the reports to really sing. And so I've got lots of examples to share with you today and show you some of that. And then lastly, we'll cover understanding the value of accounting transformation and ongoing continuous improvement for your organizations. It's not usually just one and done. It's that we've got to keep going on making our technology work for us even better. So we'll start with a polling question, the first one for you today for that CPE credit. I'd love to know how many people are currently on your accounting team. Is it just you? Are you wearing lots of hats? Do you have 2 to 4 people, 5 to 10 people, or more than 10 people? So take just a moment and answer that question. It gives me a lot of information in terms of the size of your organizations and the size of your accounting department. Okay, so it looks like we've got several organizations. 38% is our largest percentage with more than 10 people. And then in the 5 to 10 people, we've got 26%, and then 2 to 4 people, 25%. So it sounds like we've got some larger accounting departments and organizations. I'll just say that I'm sure that all of you are somewhere on your journey on, building a really wonderful accounting department and adopting all of that great technology that frees up our time. And so when we think about how finance leaders must become more data-driven, we see that you've got to free up time so that you can have time to synthesize your own intuition and experiences and understand your organization's data and those trends and the history of all of that. I know I get caught up in all of the day-to-day accounting transactions and not oftentimes the ability to just stand back and look and watch really what's going on. So when we surveyed CFOs and finance leaders, more than 77% of those finance leaders recognize the need to be data-driven. And that finance function, you've got to have time to be able to achieve the strategic goals. However, also, they said that 64% admitted that the finance function is not proactive enough in using data and analytics to identify and prioritize and address critical issues. So regardless of where you are in your growth stage or your business needs, the key to being insanely efficient and minimizing unproductive processes and leveraging the relevant technology that saves you and your team time and money. And in a recent survey, 4 of the top areas of being data-driven for your company's finances or your financial operations or even your revenue operations teams, the first one hands down was to automate the financial processes early, Also identify what metrics you've got to need by stage processes early as well. And then also eliminate process challenges that's delaying the close. The fourth one was building your financial ops tech stacks, tech components all in one stack. And so when we see in this graphic, most CFOs and finance leaders, their time is allocated to being the accountant, more than 55%. And so when we think about how do we flip that, the desired time allocation of being the leader and the forward thinking and strategic person, they want to be 50%. And so that's what this webinar is about today, is how can we take it and flip that where you're not being mostly the accountant and just recording the things, but instead the leader and forward thinking and driving that. So Maggie, if you'll go to the next slide. So some of the top key issues that we see facing technology companies today, really that you've got a lot of competition and innovation. Tech companies, there's lots of questions about market dominance and fair competition and balancing that innovation with the healthy competition and preventing the monopolistic practices. Those are some of the ongoing challenges that we see. And so the ability to show clear financials, if you're going to be raising capital, that's the key part for gaining investors and having a leg up on the competition. I recently interviewed Lauren Fernandez talking about what private equity looks for when making investments. And the biggest thing that she conveyed was that you've got to have your accounting accurate, up to date, and in a way that investors can rely on it. Additionally, there's a lot of regulatory challenges and changes. The governments and the regulatory bodies, they are grappled with the task of creating and updating the laws and regulations to keep pace with this rapidly evolving technology landscape. And, these are related to antitrust or data protection and emerging technologies. And so it gets us to the third point here of the key issues we see you facing is that you've got to prove your sustainable growth. So what's important now is to show an enduring momentum to use your data to confidently adjust the business drivers and positively impact your business performance. And so you can breathe life into your data and script it, and that can help lead to the next round of funding an IPO, as an example. So tech companies are really facing a couple of other issues. In terms of talent shortage is a big thing right now. The demand for the skilled professionals in the technology industry, I'm sure I don't have to tell all of you, it's often outpaced the available talent pool that's there. It's a big reason why we focus on helping clients outsource that, because there's a lot of concerns about the shortage of qualified individuals in terms of cybersecurity or data science and AI. In our digital advisory practice, those are some of the things that we look at is how can we combine the accounting with the finance, with the cybersecurity, and also with the data science and AI. And so in terms of upgrading from orders to subscriptions, that's another big important part. Orders that have annual renewals may not be your style. You may need flexibility to handle your contract amendments and upgrades, et cetera. And what's important is that you've got to have that real-time data and forecast to increase your CLTV and spot potential churn before it happens. I've got some great slides to share with you later, just some pictures of that. And the last part really is that streamlining RevRec and ASC 606 compliance. And so in thinking about it, knowing your business, knowing what those forecasts are expected to be and make sure they're accurate down to the pennies per share. When you get forecast wrong in the first few quarters as a public company, it can severely damage your investor confidence, and that could drive your stock price down. So we're saying in terms of the sustainable growth is don't slip up. The markets out there are littered with companies who aren't ready to meet the expectations of being a public company. I like to say to clients, usually when they come to us to talk about, okay, what can we do better? They're all like, oh, okay, don't look at this or this or this because they may not be closed. They may need some cleanup. But that's one of the reasons why to work with a partner who can help you make sure that you've got your stuff up to date, your business. It conveys to your investors what you're doing, and it can really help streamline that. So in terms of the impacts, of being a data-driven company, um, there's a few things that the finance function can do so you can improve in these key areas to have better decision making and improved efficiency, also increased accuracy and competitive advantage and better risk management. So that's really the summary of when you are a data-driven finance leader, that can be the impact. And additionally, there are tactical insights that you can do for efficiency. So your financial ops team, with your fast growth of your SaaS companies, they really need to see billing, cash flow, and forecasting. And so those reporting requirements, which are the end product, those should drive the process for your technology stack. And so make sure that you can develop a roadmap for your tech stack, for your tech company. And so in terms of preparing for deeper scrutiny, whenever you're getting an investment, some things to look for, not only maybe you want to be ready for an IPO, but you may need to be audit ready as well. So think about that. The keys to being ready for an IPO are the same things as being ready for an audit or ready for an investment. A lot of tech companies out there are building the companies to be able to grow into that investment. And so in streamlining the financial processes, focus on close, making sure that that is automated. You've got to have a modern architecture for your data to be able to get that powerful reporting that you need. Additionally, the internal controls, you've got to have those approvals and audit trails, and you've got to have the skilled staff that has those specialized skills if you're going to go public or you do need an audit, et cetera. One of the big things that we see is that companies, it's hard to find that, and they want to outsource. To make sure that if you're outsourcing it with a partner, that they've got that customized approach for what you need, and using it in best-in-class business systems that are processed and linked. If your CRM is linked, et cetera, I've got some pictures as we go to. But when you think about beyond the IPO, you've got to have fast and accurate financial processing, and you've got to make sure to evolve those. The compliance piece is huge as well, and also to focus on the forecast. So I've got some ideas on how you can build out your departments before and after, and also in addition to that, if you need some additional talent that you may not have to supplement, how to do that. I've got some org charts to talk about as we go. And then really it's all about the data visibility, managing the bottom line and slicing and dicing the business drivers with that accountability for custom dashboards. When I think of the word dashboard, I think about, can you look at all of your data the way that you need to over a cup of coffee in the morning? And so those are the big things about the deeper scrutiny as you go, as you grow, wherever you are in your journey with your organization. Those are the things to continue to think about. The next thing that's the most important that I see clients that really need is that cash forecasting. And the forecasting piece, to me, the finance leader, your job starts when the books are closed. And so how can we look at where that cash is going in the future? That forecasting piece is just so crucial. This is one example of one report of how you've got to go, from the historical, reactive backwards looking into that forward looking stance. So when we think about that journey to the strategic financial function, we see that a lot of people are in that reactive mode, and you are in that financial historian reporting past data with manual accounting processes, backward looking reporting in Excel with limited financial visibility. And so usually the team is spending several hours just on the transactional accounting, and they may not even be able to close the books timely. And so when we move to the next step in that journey to being that data-driven finance leader, you want to be way more proactive. And so you've probably instituted some automation, which has removed a lot of hours from your transactional processes, and maybe work with a system that provides reporting that's not as manual, and you're able to turn around the financials in less than 10 days. That's one of the things that we work on with clients, is that if you've got a 20-day close, how can you get it to a 2-day close? You've got to be way more proactive. And then as you go, as you are able to fully harness the power of all that technology stack, and also utilize AI to reduce even more manual work so that they can function at a higher level in the predictive analysis. It's the predictive analytics that are in place for that precision and forecasting to be able to make critical decisions to help the tech companies grow and evolve. So I'd love for you all to think about how can you take the guesswork out of it and lead it to better outcomes and increase your profitability there. Where are you on that spectrum from transactional to strategic? And when you think about that, where are you? We see that there is a transformation roadmap, from going from reactive to proactive, some of the steps here that you can take in terms of, do you need to upskill your team? There's a CGMA program out from the AICPA that talks about being a controller and moving into CFO. I'm not sure if any of you have ever taken it, but there are lots of new programs out there for you to take to upskill your staff. I know for sure that several of our controllers, they may not have the analytical skills, but we're working every day to make sure that their jobs are starting after the close is done. And so when we've got a quick close, when we've got things automated and streamlined, that's when we can look at how can we implement AI to find those things that usually took us hours and hours to do, and also to get predictive. So it's one of the biggest questions we get from our clients is, how can I predict what's going to happen, especially with cash, in the next couple of weeks, in the next few months, and especially in the next couple of years. And so from the CEO perspective, they want to know where they're headed, how can they enhance the skills to be able to get there, and look at trends of other companies and benchmark themselves not only against the industry standards, but also against their competition and other companies that are their size. And I think that that's that part of being predictive is, if I could just say, maybe one idea that I've been having lately is a rolling valuation. What if you had that monthly rolling valuation to show what the company is worth as you go, instead of waiting till the very end when you're about to go through due diligence or about to have an event, maybe an investor event, et cetera? How can we look at what we can do in terms of being way more predictive of where the company's headed and what it'll be worth at that time? With that, it brings us to our next polling question. So, where do you currently fall on the leadership journey? Are you reactive and live in the past, proactive? You've got a hold in the present, predictive. You are already predicting the future, or explosive, that this is all a disaster. Okay, good. It looks like the majority, 46% of you are proactive. You have a hold in the present. And several of you are already in that predictive world. So, this may not be the webinar. You could be probably teaching this webinar for sure as well. So when we think about that, that actually surprises me. So all of you are, it looks like, that data-driven finance leader. So when we talk about shifting to the data-driven finance structures, there's some things that we want to talk about and consider. In terms of enhancing our people and our processes and our systems, those are the three things that I always break down. Do we have the right people to create that data-driven financial team? And then also the processes. Do we have the processes correct? I would say that documentation is the biggest thing. Is let's draw out our processes, our workflows, and see where is that, not in a good spot. Where are there red that comes up? Do we have the right processes for our revenue recognition, et cetera? And then the third part are systems. I would say that you could take these three areas and draw a Venn diagram around where they all cross. A lot of times we see clients that have implemented a system, but they're still doing their processes the old way. And a lot of schedules are manual, et cetera. So in the next few minutes and throughout the next webinar, I've got some pictures of how can we automate some of those processes. I've seen that the same people that do the same processes over and over and over again are not always the best ones to change it or transform it. And so in terms of going into real-time reporting and having that visibility, oftentimes you've got to have that creative side and draw the pictures with that. You may have a lot of technical accountants that know how to record the processes and the transactions, but they may not actually know how to draw the reporting. And so making sure that all of these work in conjunction with others, that's one of the biggest places that I spend my time every day, is making sure that the strategy of ongoing continuous change is there. So in terms of the finance team, what you would have before IPO, and I've used IPO loosely here, what you would have before an audit, have an audit readiness, or also maybe what you would have before you have an investor become involved. We see it shaping up really into two sides, and the CFO is usually the one in charge. Some of you may have smaller organizations, but based on the feedback, it looks like a lot of you have more than 10 people in your accounting and finance department. And on the accounting side, there's a lot of areas there that can be automated. There's also a lot of areas there that you may not have in terms of connected for the CFO to have the information at their fingertips. But you've got to rely on that finance ops team, because for tech companies, the contracts are so important. Cherry Beckert's also a technology company as well. We do contracts, we do resale of software. I have contracts for outsourced accounting. And so what's the term of the contract? How can we set it up for renewals? That's another big part. And also the plan and the budget. Where are we headed? What's the budget for that? Are we on plan? Are our customer counts where they need to be? And then additionally, that board and investor relations. And so that's the team before an IPO, before an event. But once you go through an IPO, or once you go through an investor event, you're going to see it shift and change quite a bit. So your finance team is the CEO is then very heavily involved. Additionally, adding in SOX and adding in an FP&A team, a financial planning and analysis team, they're going to come in and work on the plan and the budget. And the finance ops teams is going to separate over on the contract side, but it's going to be all about the forecast. So what is our pipeline doing from our CRM? How many people did the sales team talk to that day? What's the forecast going to look like? And additionally, you may have that SEC reporting. And if you were to think about getting an audit, we've also probably got some bank reportings or some debt compliance that we need to do. So you can interchange some of these, but this is just a draft of what we would say you would need to do in your finance team after IPO to be that data-driven tech team. Additionally, I wanted to show another view of what if you needed to shift your people in your accounting department. A lot of times I see that accountants and the finance team may not need to be doing the accounts receivable and accounts payable and payroll. Instead, they may need to be doing all the planning and budgeting there. So some ideas that you could outsource your CFO, I've put those in orange. These are the ones that we have different tiers of outsourcing services so that you can go in and build that FP&A team yourself. Additionally, we are an outsourced FP&A department as well. And so running the plan and running the budget, let's say if you were to lose some of your team or you don't have the talent there, how do you plug that hole? With digital technologies today, it is so easy to supplement your internal teams. Talent is definitely, there's a shortage out there. And so those are some of the things to think about, is how can you do the things that are most important? Maybe the finance ops, work with your customers to do the contracts, make sure your board and investor relations and reporting is where it needs to be, et cetera. But maybe think about how can you outsource some of those routine stuff so that you're not in that 55% of handling the transactional accounting, but you can go into that strategic leader from that very first slide that we talked about. So with that, it gets us to our third polling question. So in terms of multiple choice, you can check all that apply. Where are you in your current systems? And take just a few minutes and read these over and let us know. Okay, this is really surprising to me with other on-premise software. So not in the cloud, or wanting a cloud-based software. Additionally, manual spreadsheets. And so that part is not quite as surprising to me. I would say that one of the biggest things that I talk to accountants every day is manual spreadsheet hell. So in thinking about that, if you're successfully on QuickBooks or outgrowing QuickBooks, QuickBooks is a great product for certain size companies, but there's also other tools out there. And in thinking about implementing the right tools, there's really three technical capabilities that your tech stack should be able to do in order to become a data-driven finance leader. And so realizing the benefits and the significance of designing your chart of accounts for specific reporting requirements, there's systems that can help provide the ability to manipulate the reports with multi-dimensional capabilities to meet the reporting requirements. One thing that I like to talk about in terms of the data dimensions, which is why a lot of people are usually in Excel, is that you classify things differently than just the accounting. So let's say that you had a marketing campaign that you're running. And with that, you want to see the benefits of how is that driving revenue. Having a different dimension to look at the ongoing marketing and being able to tag it that way, having those systems in the CRM synchronized with it to say, how many do we have to talk to close? How many days of close did it take to drive this type of revenue? Which revenue takes the longest to close? Those types of analytics are going to be very important. And so getting down to the source transaction and coding it in a multi-dimensional view is usually one of the first steps of getting out of those manual spreadsheets so that the system can do that reporting. When we talk about automated financial operations, we want to cut out those manual processes. And so Maggie, if you'll just go to the next one. The organizations for tech companies, we see that the organizations are looking to the CFO for the strategic leadership in that. And 78% of CFOs have noticed that their influence in expanding beyond the accounting and finance is happening. And 87% of CFOs surveyed feel pressure to collaborate on cross-functional initiatives. Related to, reducing through automation, some things where subscriptions are different is that, a lot of companies, you can go to the next one, Maggie. We see that from order to invoice, it looks differently. So as you're recording those types of things, for the early software and SaaS companies, financial systems for order-based were invaluable. So that QuickBooks, et cetera, those companies sold discrete products and had core additions. And so if you're on-prem, et cetera, but you're now selling usually user licenses and also additional modules. And so to renew, you simply sold another order, but everything was separate, and you managed that revenue recognition through vendor-specific objective evidence to satisfy the auditors. And so a new subscription paradigm changes all of that we see on the right. In the subscription world, you've got to understand the lifetime relationship with the customer and all the upsells and renewals and how they all build on one another. Usually that's tracked in manual spreadsheets. So you've got to understand the revenue and the billings and the cash from those again over the entire lifetime of that customer relationship. And so that shift affects everybody. It affects the CFO, leading the strategic planning with forecast and visibility into business levers. That's why I like to say outsource your accounting so that you're not doing those manual spreadsheets anymore. And also FP&A to get the trusted data sooner without reconciling multiple systems. For the controller to eliminate the need to validate the orders and expenses, that's going to help close faster. And then the sales op team to adjust to billing scenarios and also adhere to the sales policy guidelines. And with revenue operations, shift from data entry to revenue analysis with the automated billing and revenue and item catalog sync. You want to ask who is involved in these discussions and what's important to each of them. And that's going to help us when we establish the flexible billing across revenue types. Different revenue types that are tied to the contract. When we think about technology companies in terms of usage, when you've got the flexibility to dynamically support a variety of these pricing mechanisms for SaaS or subscriptions or perpetual, you can adapt to your subscriber demands and those competitive forces and also market disruptions. And also you can meet the customer demands and invest in your business so you're better positioned for growth. So when you've got the accounting systems and the billing options and looking at the frequency, are we billing monthly, quarterly, annually, or variable? Are they on pause, hold and resume? Does something happen to the customer? They want to pause their subscription. And then also the timing. Is this a one-time project-based? Are they paying in advance or in arrears? Or is it every invoice that you're going to do that? You need the flexibility to bill across all of those different ones. And so when we think about it in terms of the systems, the really big part is that we've got to discover the importance of connecting your financial data and your non-financial data. So in terms of an integrated solution, we'll look at the financial numbers, but also the operational measures, and that's that finance ops team. I've mentioned already like your CRM and your pipeline and where your customers are, but also thinking about human resources and payroll, that needs to sink in as well for your sales teams, commissions, the online activity that's happening. If you're in e-commerce or do anything online related to billings and driving bookings or things like that, the billing system is really important. And so when we look at the complete tech stack, we really want to focus on a lot of those integrations. And so I've put a few areas here just to consider all the products that are out there. We are navigating, change with technology at such a pace. It's funny when I go to conferences and I meet all the vendors, a new vendor has a new way that they're doing things. There's a lot of acquisitions going on and within all the tech companies as well. And so how they're adding AI is one of the biggest things right now as well. But when you've got the easy integrations, you can have that complete tech stack from CRM or your order all the way through to recording it and also reporting on it. I've thrown up just some of these areas that if you're still in manual spreadsheet hell for commissions, as an example, you may need a new module for that. For AP and automation and how you look at which bills to pay, you may need to look at other things. If you've just gone international as well, if you've got some international banks, a lot of these products don't work across that. You need one that will work for non-US bank. Some of my tech companies over the years have really celebrated where their customers are. I know one called me and had a 3-year plan to get into Canada, and finally they were able to do it, but it brought a whole host of compliance issues, et cetera. And so they were tracking all of their Canadian sales in a manual Excel spreadsheet. And so we were able to switch that. We were able to automate the revenue recognition piece, the purchase orders, and all of the sales orders, et cetera, for all of those bookings. And so this is the way that you need to integrate all of that. And then for me, it also always comes down to the bank rec and how can we help let our back office solutions talk to our ERPs. And so in terms of the reconciliations, usually those are where the manual spreadsheets are the most. You want your ERP system that has your general ledger codes, et cetera, to come back into some of your back office software. Additionally, if the account balances come into a month-end close software, a month-end close software will help you roll forward those schedules. Those schedules are updated also with your bookings. One area that we had a lot of great success with a month-end closed software to help with automation was bookings. They came in as an invoice or a sales order turned into an invoice, but we had rounding errors on it in terms of the amount of payment. And so there were a lot of debit memos that had to be booked. We were able to automate that for one of our clients that had those bookings, but the customers would add it all up and they would come up with a different one. And then we had to apply it. We were able to automate thousands of debit memos to clear out any of the open sales orders and open invoices. So some of you may be dealing with some of that. So to consider a month-end close software to do that, you want to be able to have those schedules create automated journal entries and the payroll and accrual entries. So accrued expenses, et cetera, the deferred revenue piece of all of that, and bring it back into the general ledger. That's going to help you close the books faster and more accurately. It's when you've got the systems talking to each other, that data synchronization. And when you unite those disparate teams and processes and data, it's in a collaborative platform like that. So that brings us to planning your close scenarios. Close, I think, is always, the biggest manual spreadsheet hell. And so we see if you're going public or you're getting an investment or any of that, you can really benefit from a best management reporting of any system out there to have a modern multi-ledger, multi-dimensional general ledger architecture for streamlined, accurate reporting, and having different dimensions integrated into your reporting interface for powerful reporting. Some of your products and services to be able to have an item dimension, to be able to group those types of things is very important. Also to identify what types of customers you've got, et cetera. And so if you've got it all in one place, especially if your general ledger is the master versus your CRM, you're going to get a much better real-time information to have better forecasting and data visibility. In terms of also having dimensions, that's going to help you with the finance piece. So across the budgets, across the transactions and operational measures to look at for forecasting accuracy. So a configurable system is going to meet your requirements to get out of the spreadsheets. And so focusing on a best-in-class solution and priority of integrating those with others. So making sure to build that world-class set of systems that talk to each other. You've also probably got to do new processes. So your old processes are not going to work. And so with the fast pace of innovation, those are the things that are going to help support your growth. And the easiest solution for multiple entities, if any of you have multiple entities, you've got to have that scalable architecture there to add multi-entity to make sure that you don't have different vendor names or customer names across all of those. It's a lot of the manual spreadsheets that we see. And even having multiple books to track each of the reporting currencies as your reporting and compliance becomes more important. The detailed record of consolidation entries to streamline your close and reporting, et cetera. Those are the steps that you want to take to make sure that you can build that 3-year monthly financial model for each scenario and associated contingency plan on that. That's becoming the data-driven finance leader. And that's going to continue to lead to regular forecasting and that waterfall analysis. And so what does that look like in terms of pictures? So if you've got better sources and dashboards for pictures, this is one example of a month-end close software dashboard. So where are we on month-end close? How many have been closed? How much is still open, etc. And then when we think about having an automated way to substantiate accounts, you want to think about that automated reconciliation templates. And so you can import that stuff automatically, your general ledger balances, your bank balances. You can have pre-populated policies and procedures. So as an example, is it less than $100 that your schedule is off? Then go ahead and do an automatic import of the reconciling items. All of your notes are attached documents. You have a complete checklist. It gets certified. And if it meets an auto certification, that's moving out of that accounting transactional state. Next, you may want to look at bank reconciliations. And with the bank reconciliations, those things can be much more automated as well. A lot of times in our SaaS companies, there's a lot of changes in journal entries. Sometimes those journal entries can actually blow up the way that you're looking at every day, the operations. And so for having faster and easier and error-free bank recs, to have that proactive approach to unmatched transactions, you can put in different new softwares out there to have an automated bank rec. And I can just tell you that the way to reduce your month-end close is to have this stuff in an automated way where every day your bank transactions are being reconciled and all of your adjustments are made, and not save that to the month-end close. Having unmatched items and only handling the exceptions in that orange box up top, that's really the way to go, so that you can manage by exception and you can stand back and think about, instead of having to record all of that, all of your comments and documents are in there, and that creates that future journey of the data-driven finance leader where it's all an automated journal entry. You're not having to do that in Excel. You're not having to import that type of stuff. So when you've got your back office and your bank recs and your account recs and all of those Excel spreadsheets into systems, what's going to be the benefit of that is that you're going to have the ability to look at the reporting, where when you do all of that, the SaaS metrics for a CEO must have, you can fill in the blank about when you do that, you can produce something that is beautiful. These dashboards that have non-GAAP statistical data right beside the intelligent numbers that are also an outcome metric. By enhancing the general ledger with that and these dashboards in real time, and incorporating the changes, even contract modifications as they come in on the metrics that you want, that's where the tech companies are going to be able to track those key metrics that reflect your organization's success. And non-financial metrics, they could reflect, a lot of things here in terms of churn or CAC or some of the things that you need, and you're going to have it right at your fingertips and not in those Excel spreadsheets. And so those are the things that the CEOs definitely must have. And once we've got the close done, that's where we're going to look at how did we compare our budget versus actuals, and where are we on our journey. And so moving into the finance piece of it, it's all still in the same system. And with that, we're going to be able to deliver the real-time SaaS metrics on a dashboard. And so here we've got an example of some of the SaaS KPIs out there. And so two of the most important metrics are churn and CAC. And so churn is one of the biggest factors on your valuations. So by doing all of this, by connecting your systems, using a modern ledger, etc., it's going to allow you to track all the sales, the original sales, the upsells, also the downsells and renewals, both in revenue and also in customer count. And that's going to give you a clear and detailed view into customer churn. And so we see here, we've called out the CMRR, the waterfall here. Additionally, the CAC trend, like where are we on trend for that, and some CMRR analysis. The new customers trend over to the right classified that. So the client acquisition cost tells you how much that it costs you to win the new client. So because it's a multi-dimensional general ledger system connected into all those things, you can track the expenses such as marketing, and you can also post which event or campaign or channel the expenses came from so that you can see your customer acquisition costs. And so, I would ask all of you to think about what other metrics do you want to see out there? Which ones are you tracking in Excel spreadsheets? Or are there other systems that you can get data from where you have that? How long is it going to take you to get the reporting out today? Are you having to update it every time manually in Excel? Or can you move into a better view where you can deliver the real-time metrics without having to crank all the numbers? And as you think about getting into, reporting for your investors, if you're getting a new investment, the investors are going to demand this. I've worked with several CFOs who come in and say, I'm not able to answer the board questions, or I'm not able to answer our investors' questions in less than 4 days because I have to rerun all the numbers, consolidate all the numbers. I have so many inaccuracies, et cetera. And so that's what we're doing in terms of shifting to the strategic CFO, where they're looking at and analyzing it so that they can help forecast for the future. So the forecasting for the future, when you've got it here at your fingertips in terms of the contract forecast, again, with everything derived from the contract master, you can see the forecasts for billings, for cash, and for revenue for the future with the press of a button. And so it's easy to see your forecast for billing and payments and revenue from the original sell. And I've already mentioned that just in those upsells, downsells, and renewals without manual reconciliations or spreadsheets. And so we're getting into predicting the future. So, how are you doing your forecasting and revenue today? I'm assuming all of you are probably, a lot of you are doing it in manual spreadsheets, and it takes you a long time. I think that some of the numbers that I've seen be reduced is 40 hours at month end close of not having to gather all of that, but it being in there. In terms of the delays for management decisions, taking a 4-day turn on all of these numbers, taking that down to 40 minutes or 4 minutes. That's really what we're getting to in terms of the data-driven finance leaders to forecast the future. With that, also having an automated CMRR with the history, you can view it on your SaaS metrics. You can also look at your waterfall. And so if you'll look at Maggie, just click through some of these. I've got a few examples of, the schedules. You can drill into it. So when you see the blue numbers and the links, you can drill into that. It brings up the schedules. And then also it always takes it down all the way to the contract. And so it's always back to your contract for your monthly recurring revenue, or your MRR. For that is a big part. So where can we start in terms of being able to get? I think that you can start, you may not need all this functionality today. You can start simple and continue to scale big. And you can buy the pieces when you need to layer them in, the same way that you can outsource some of your roles, so that you can get out of that manual Excel spreadsheet, outsource some of this, and start with your core financials, getting your subscription billing or revenue recognition automated, that dimensional interactive reporting, your SaaS metrics, and project tracking and electronic payments. But then think about this, if you have a Salesforce or a CRM and integration there, the next part is the planning and budgeting. So having that all integrated. Additionally, the multi-elements arrangements and multi-entity, getting into the banking cloud, make sure all of your banks connect into that. And then fixed assets. If you've got multi-currency or prepaid, you can automate all of that as well. And that gets you more into, as you grow and get international tax and having global consolidations there and advanced audit and SOX compliance, all of that, you can scale big. And so that's really the example of where you want to go, that journey, but it can all be done, right now. You can start small. And so I was going to share just a couple of case studies that we've seen. We had a growing AI company and they were brand new, and they had several issues. They had no real-time reporting. They were very manual. They had no experienced talent inside of their organization from an accounting perspective, and they were looking for multi-million-dollar investors. It was impacting them in ways where they had weak deliverables, and the founder was continuously scrambling, and he missed out on a lot of tax incentives as well. So we came in and helped rebuild the accounting department, rebuild the systems, and the systems that were implemented, we went cloud-based. We had experts in the SaaS and the accounting system, and we standardized the contracts for their customers. That input automation and operational process, like accounts payable, additionally accounts receivable, we pulled in our teams from strategic tax and also our teams from valuation, because they were going to go through a quality of earnings. And so we wanted to make sure that we had all that technical accounting set up correctly. And so delivering the financial statements that helped them secure a large investor, and they got in several tens of millions of investment into their organization. So some of the success measures there, the company raised $24 million in capital and went on to acquire additional companies. And now they're in the acquisition phase of enhancing their AI company. One other case study I wanted to share with you is that we had a PE-backed technology company catering to the medical field, and the PE had purchased 4 similar tech companies and only one accounting team. And so they got rid of 3 different accounting teams, but they had one accounting team, but the accounting software wasn't sufficient enough for the complexity. They were buried in Google Sheets. They must have had 500 different Google Sheets for all the reconciliations they were doing across all the companies. And so they had different processes across each one. The controller was absolutely drowning, and they were not getting the reporting to the PE company and to the board. And so we went in and implemented solutions. We did an assessment, and we redesigned the processes. We helped layer in people to be able to do some of the things that the controller could not get to that had to be done. We also replaced all the systems. And so we implemented across all 4 companies, different entities, a consolidated view of all of that. And they outsourced their accounting function to our Cherry Bekaert outsourced accounting team. And so that created the dashboards for the private equity executives and for the board. We reduced the timeline for month-end close by more than 10 days. And also we used some special teams to handle their OBS accounting and to roll it into the reporting. The opening balance sheet part was a big deal of what each one of the companies were valued at. They had acquired 4 in 1 year. Each one of those had different things. We also looked at the customer lifetime value and make sure we could track it before acquisition and after acquisition. And so our success measures there were regular monthly reporting to the PE firm, and we were able to complete the audit for 2022 in a very timely fashion that had not been done before. So those are some examples of becoming a data-driven finance leader, of how you can approach it, what the journey looks like, and how you can continue to scale that. So for our last poll question number 4, would you like, if you want or have any desire to connect with our outsourced services team at Cherry Bekaert, you can let us know here in the poll. Okay, it sounds like all of you, maybe in the future, 31% and 63% no. So that was your last poll for CPE. So in pulling it together for what's needed for a data-driven finance leader, just to think about it, we shared today the people, the processes, the systems, they all have to go hand in hand. Additionally, moving from transactional in that reactive frame into proactive, but getting to the strategic part, being predictive. It's all about that automated financial operations with a multidimensional analysis of the key results, and then synchronize all the data across all the systems in real time. I'd say those are the best things to get out of that manual spreadsheet hell. So that concludes our webinar today. Thank you again for joining us. If you have any additional questions regarding today's topic, please reach out. We definitely value your feedback, and we ask that you take part in a short survey, which is going to appear whenever you leave the session. So thank you so much for joining.